The markets were tumultuous in the past trading session. Crypto didn't get a follow-through. What is going on? Stay tuned, we're going to look into it today. Hi everyone, I'm Ken from Crypto Trading KS. My goal is to assist you to become more of a financial and emotional blessing to yourself and those you love by knowing where smart money is buying and selling, so you can become more synchronized in and earn greater profits from the market. Be sure to subscribe and smash that like button. Don't forget to turn on notifications. Let's run the numbers. The main markets in the past trading session were really volatile. What happened? We saw a big drop off in the VIX, the fear gauge of the market, which gave junk bonds a much needed boost of confidence. Also, we saw that the US dollar currency index lost a lot of value. Yields also came down, which was a very bullish thing to happen to gold. We also saw that the main markets reacted favorably. There's a few places that we can look to understand the market action in yesterday's market. One is the DXY. With the release of the CPI month-on-month, year-on-year, and core CPI month-on-month, all of those variables came in under what was anticipated. This means that inflation is dropping, both the headline figures and the core figures. In fact, the CPI dropped so much that it posted its smallest gain since 2021. The aggressive moves of the Fed are working. Inflation is coming down. The stock market reacted favorably across the majority of sectors, with the expectation that the Fed will not increase the federal funds rate at its 26th of July meeting. However, the stats don't lie. What we're currently seeing is a 94.2% probability of a 25 basis point increase. What happened to the DXY? When you look at the DXY through normal processes, it's really difficult to understand why the DXY drops so dramatically. But for people that use the CTKS method, we knew that there was a lot of open air, and that below the 101.264 mark, the DXY could drop very, very quickly. When these are below price, this is what is the result. When they are above price, it's the opposite. If we're going long, we want to see open air gaps above the current price, not below it. And what did we notice? The DXY dropped to an absolute confluence of smart money buy levels, or Stanfield levels, or SLs. And it's being caught so far by that momentum. Will it actually reverse? Well, to answer that question, we have to have a look at a lot of other charts. But you can see here on the DXY, that big drop that the DXY registered is all about that open air gap between smart money buy levels, or safety nets. One thing that we noticed, the crypto market was not happy. It didn't rally with the stock market. There's a very specific reason for that. Rule 239, CTKS structure overrides. When the dollar dropped, it got caught by these smart money buy areas. They're like safety nets. And because there wasn't too many in this fresh air gap, it took a while for the safety nets to actually catch the heavyweight price action. We need to also keep our eye on the US 2-year. Rule 239 requires an understanding of Rule 446. All markets are intercorrelated and interdependent. As the DXY dropped down, it literally pulled the US 2-year yield with it. And what did it do? It broke through the first safety net, broke through the second, and then started to get caught by the third, the fourth, and the fifth. This is why, when it comes to trading and investing, we need to know where the safety nets are for just this reason. We can see continued pressure, continued negative pressure on the US 2-year yield. We can see a slightly different story playing out on the US 10-year yield. These smart money buy and sell levels are drawn up through the CTKS method, which you can learn yourself, and they're drawn up since 1912. What we notice here is also there was a confluence of safety nets as the 10-year came down with the 2-year and the DXY. Understanding the relationship between the 2-year, the 10-year and the DXY if you're in commodities is incredibly important. Also, if you're in crypto, the stock market or Forex, it's equally as important, but a lot of people just don't look here. We can see the US 10-year has a lot of smart money buying support, and it's a lot stronger than the US 2-year. Because of all this support, it could be pushed back up. So when we look at the DXY, we look at the 10-year, they're both at support. The 2-year is just a little bit weaker, but it's trying to get above it. Crypto is a very powerful indicator of what the stock market, the main markets, could be doing. We're seeing that Bitcoin and total crypto market cap are currently coming down. What does this mean? Crypto is picking up that the US 10-year, the US 2-year and the DXY are all pretty much at support. But there's a little bit more to it than that. Right across the entire crypto market, we were at smart money resistance. What happens when we're at resistance? We get pushed down. That's why it's so critical to know where the smart money, where the algorithms are stepping in or stepping out. If they step in, they're going to increase price. If they step out, price will lower. Right now, we can see all of these smart money resistance levels are causing the algorithms to sell. The majority of people only look at the chart that they trade. Algorithms don't do that. They look across charts. At least the expert ones do. It's absolutely critical to know where smart money is selling and where it's buying, because what happens? The smart money sell areas will reject price. They'll push it down. The smart money buy areas will push price back up. If we get weakness, it won't make it. That's called negative air. If we get weakness underneath a smart money buy area, that also generally means that we're going down to the lower one. You could think about it this way. If it's strong enough, it's going up. If it's too weak, it's going down. Where's it going up to? The next SL or the next Stanfield level. Where's it going down to? The next SL. It just makes trading and investing so very straightforward. Masterclass students are very familiar with the rule, no alt can escape Bitcoin's gravity. As Bitcoin comes down, what will the other alts do? They will be impacted by Bitcoin's gravity. You can see down, up, and down. Down, up, and down. What about this with BNB? With Ethereum, down, up, and down. What about BNB? The same thing. What about XRP? The same thing. What about ADA? The same thing. What about Doge? Yes, but Doge is starting to get a little bit more powerful. Keep your eye on that. We're always after early recoverers, which are called inverters. What about Solana? Solana was quite strong, but it's still down and up. It's just following that particular path of Bitcoin. What about Litecoin? Litecoin is also showing a bit of strength. That strength is relative to Bitcoin's gravity. Gravity gives us one perspective, but we must understand relativity. It's like physics all over again. When you look at Bitcoin, we can see that Bitcoin's price action is like this. Ethereum is following, but Ethereum is slightly stronger than Bitcoin at the current time. What does it mean? It's overextending the positive movements in Bitcoin's price action. What about BNB? BNB is seriously under Bitcoin's gravitational pull. What about XRP? It's starting to align. What about ADA? It's weaker. What about Doge? It's starting to align, starting to go slightly positive, and we can see that through that inversion spike. What about Solana? Solana is still under. Litecoin is very close to spot on. In order to invest or trade effectively, you have to understand how different tiered charts relate to each other, and then understand relativity and gravity. The most important thing is synchronization, and we do that through three-dimensional risk management. There's a rule inside financial markets: you get paid for your synchronization. If you're desynchronized, prices moved in a direction that you did not anticipate. That's why we do three-dimensional risk management. We anticipate up, down and nowhere price paths. After being in financial markets for more than 30 years, I've found that people generally don't anticipate where price can go because of the Tier 1 charts. Tier 1 charts are the engine of global financial markets. They impact absolutely everything. But because the majority of people just focus on the particular charts that they trade or invest in, they wouldn't even dream of looking at Tier 1, Tier 2, or Tier 3 unless they're investing or trading in it. This is the main reason people get desynchronized. With three-dimensional risk management, you're always saying, for example, I believe the price will go up, but what if it doesn't? What if it goes down and does the exact opposite thing to what I anticipate? What would that look like? Or what if it doesn't do anything? What would that look like? We know we control the trade or investment, but the market controls the return, and that return is always based on your active learning, your knowledge, and your courage. It does take time to get synchronized in with the market, but once you do, it's life-changing. Stephen Mary Allen said you can easily get 10 to 18% gains in as few as a couple of days. I just keep turning over the same dollar amount, based on lower and lower SLs determined from the service, reinvesting that profit into Bitcoin and Ethereum with limit orders. Well done, SME. And Beardy said, I've become a financial blessing to myself and those I love. My wife has been able to resign from her job and will be homeschooling our first grader. Invest in yourself and get the service. For example, if you were trading ADA, you know that ADA's got some pretty stiff smart money resistance at around that 29.5 mark and smart money support down at 28.9. What we've seen with total crypto market cap getting above that particular support and into resistance, that's dragging the entire crypto market down with it. Remember, all the charts are intercorrelated and interconnected. If you're just looking at ADA's chart because you invest or trade in it and you do not look at the other charts, you will be blindsided by price all the time. You can see currently ADA is under that 28.9 level. It's currently 288. Inside the service, you get these indicators that you can overlay on your own charts. It just makes it a breeze to trade and invest. As Stephen Mary Allen said, for example, when we're looking at Tesla, knowing where these SLs are is just a game changer. For example, Tesla came up through a smart money sell level at 277.49. It came up further to test that 283.96 and it got rejected. What did that mean? It was going back to the previous one. But if it couldn't hold it, where was it going? To the lower one. And that's what we saw happen at 273.67. What from there? It gravitated back, consolidated, but then lost it. And where did it hit? Another lower support line. And then where did it bounce back to? One that had previously broken. You can see if it's not going above, it's going below. We know that the US 2-year yield, the US 10-year, the DXY, they're all at support, so that could throw pressure on Tesla to move down to that 266.28 level. Microsoft and the euro dollar were released into the service yesterday, and when you turn on the indicator for euro dollar, you understand precisely why it's doing this exact behavior. Each month, 27 charts and 27 indicators and also 27 videos make their way to you as a CTKS Method Service Foundation member. The good news today, BNB, NVIDIA and Solana are going to be released today. If you're new to the service and you haven't received the indicators yet, just go to 00 when you log in and then to point 4. Inside point 4, there's a form that you need to fill out. Once you've filled out that form, you'll be added to the indicators. When you're added to the indicators, TradingView will send you an email. Then you just go down to indicators to the invite only script and you'll see all the indicators in there for you. Just make sure you watch the video inside the particular chart that you want to pop an indicator on. That'll tell you how to use the indicator and how not to use the indicator. As a global community over 16,000 strong, we believe in starting small and scaling, and doing so you can achieve incredible results. Please have a look at episode 950 and episode 949. They will give you invaluable tips and tricks, and a change in perception that will make all the difference. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.